Hey everyone, it's Rob Keents with goldsilverpros.com, and we're here at the North American Monetary Metals Summit 2020, and I'm joined by two guests, Leo Gantz and Florian Grooms. Guys, how are you doing today?
Thanks, I'm good. Nice to see you, Robert. Nice to see you here.
Thanks for
Thanks
joining.
for
I
having
think
us.
we have an all-world panel. We have, I believe, Leo, you're out in Israel. Is that correct?
Yes, but don't judge me over it.
I won't do that. And Florian, I believe, are you still outside of Munich? Or are you
Yeah,
traveling?
I'm at Lake Constance right now.
Oh, Lake Constance. Okay, well, cool. Well, thank you guys for joining. I appreciate it. We had a little bit of technical snafu this morning, but we'll get past it. So this panel is gold or silver better in 2020 or 2021? So I set this one up to talk about which is going to be the better investment over the next year to 2 years for our attendees. So we'll start off with you, Florian. What are your thoughts on either gold or silver?
Well, I think generally, of course, it depends a lot on your timing. So both metals had a very nice run, especially silver. I mean, incredible run basically since the Corona meltdown. And I think both of them are very overbought, especially gold is very overbought. So you want to be a little bit careful over the next few weeks and maybe months. I think my best guess right now for the next really good buying opportunity would be November or December. And you really need to be patient until that. But just looking at the gold-silver ratio basically it tells the story. I mean, we're coming down from 125 and now round about 80, I think. So this could easily snap back to maybe 90, 94. And then obviously it would be time to load up on silver again, because down the road, if we look to 2021, I think silver is definitely on the way towards the mid-30s, maybe even the $50 range, who knows. I think it will definitely outperform gold at some point again, like it did over the last few months. So if you are patient and wait for this next, hopefully, pullback somewhere in December, I personally will purchase much more silver, and I also will look to get more of the silver mining stocks. However, right now, if you buy it today, at this point, I think it won't probably be a good investment if you buy gold or silver looking forward for the next 6 months or 12 months. But
yeah, I think last time I talked.
Yes.
Oh, sorry about that. Do you have more?
Yeah, but in like going from here 1 or 2 years ahead, yes, both of them should be up quite significantly, and I think that silver will outperform gold.
Okay. Leo, I know the last time I talked to you, you had a different view on silver than you had on gold. Can you explain what your views are on both?
Sure. I think December 15th, 2015, when the market bottomed for gold and silver, the ratio was about 65 to 1. So definitely in this bull market for precious metals, silver will have to go below that. In other words, we're right about 90 to 1 right now, or 85 to 1 right now. And for this to be a mature bull market for the precious metals, it will have to go to a gold silver ratio of below 65 to 1 for this to be considered a mature bull market in my regard. So yeah, right now the RSI, the relative strength index, is over 85. That has only happened at 0.1% of the time since 1971. So definitely gold is overbought. But in the last 20 years, which have mostly been bullish for gold, outperforming many other asset classes, all but REITs have underperformed gold since the year 2000. So we're looking at a very special time for gold in this millennia. And in the last few times that gold has been this overbought, it actually did not correct. It actually invited more investors in, and 6 months later, it has been up by about 8.7%. So all of the technical analysis is screaming that there will be a correction, because the net short on dollars is incredible. It's the highest it's been in 11 years. The dollar is broken down from a 9-year trend line, a beautiful 9-year trend line. So it's definitely has started a bear market for the dollar. And so there's many reasons why on one end, short term, you may be looking at some sort of a pullback for gold, obviously after hitting all-time highs, maybe a breather. Of course, silver, since the March lows, it's up more than 100%. The spot price for it at the lows was $11.99 in the March week, where all the circuit breakers came and there was all the panic and the move to the dollar. And so if you look at any of these technical data, especially the physical delivery angle, where people have asked for their futures to be delivered and everything else, and if you call bullion dealers, you'll see there's so much demand. But on the flip side, there's a lot of data showing that, hey, this is going to invite even more investors to the table. Because look, if you looked at mainstream media right now, there's not a lot of talk about the fact that gold is pushed into 2000, and for silver there is none. And so that's one thing that is very different than 2011 when we saw these prices. It was everywhere back then, and it was all about the euro crisis, the euro default, etc. The Greek default, if you remember that. There's none of that going on right now. So there's definitely no euphoria in the precious metals sector. The gold and silver stocks, as measured with GDX and GDXJ, are nowhere close to their 2011 highs. In fact, I think the GDXJ has a 300% upside for it to match what it had done in 2011. So if you look at that, we're also in a very good situation. And the most important thing is that, unlike in 2009, when we entered a bull market for the dollar, we've just entered a bear market for the dollar. And so there's many things that are different right now. And therefore, for me, if you look at the next year to 2 years, silver is going to outperform gold in a dramatic fashion, because the dollar has entered a bear market. If you look at 2015 until 2020, gold has outperformed until June of 2020. Reason being, it rallied with the dollar. In 2018, the dollar was the best performing asset class in the world. The last time that happened was 1969, 2 years before the greatest dollar devaluation of all time with Nixon. And so in 2018, we had the same thing. And I said, look, 2 years later, you'll have a situation with the dollar. It's just too overbought, too loved. The euro's not loved. Nobody trusts the Chinese currency, and all the other safe haven currencies, the Canadians, Australian, the Swiss, and the Japanese. Nobody likes them as well. There's too much love for the dollar for no good reason. The dollar kept rising with gold. Silver, was not part of it. Silver is much more correlated to the dollar than gold is. And right now, with dollar weakness, you're going to see silver going much higher, and very different than 2009, when what you saw was a very bad capitalization rate for banks. They were very weak. They didn't want to lend. They didn't want to trickle money to the economy. They didn't want to create the multiplier. They didn't want to do anything with their reserves. They just wanted to have them sitting idle. Right now, the banks are well capitalized. They didn't need bailouts. They will start lending to 80 million millennials that are currently living with their parents, and they're 30. They're going to get married. They're going to have children. It's not sustainable. I don't care how poor you think the millennials are. When the government tells you, we will give you 90% of the equity to buy a house, and you'll get it at 3% for 30 years, you bet there's going to be a generation of people leaving their house. So you have the multiplier effect in place. You have a dollar bear market. You have fiscal policy that is moving money in the economy. Very different than what you saw in 2009 and 10, where the Fed was the only game in town. Obama didn't do anything. And you have a very divided political sphere, whereas Obama had really, it wasn't the same. Many people hated, Obama, fine, but it wasn't as divided as it is right now, where Democrats and Republicans can't even talk to each other. And so you have all of these that are very different than 2009 to 2011. So I think this reflation is going to be much better. When you open your ignition in the car and you drive to your bullion dealer, or when you call him, and the average American is going to buy what, 5-10 ounces of silver, that order at $30 is $120 for 5 ounces, okay, or 4 ounces, etc., or $150. And if it's 40, then it's $200. If it's 50, then it's $250. If it's $60 an ounce, $300. The difference is not that much. If you were already, in your mind, if you're already going to buy silver because you're scared about inflation, another $100 is not going to change your decision. And therefore, I see silver heading much higher. And there has never been a bull market for silver since 1971 that has been below $400, 400% gains. So taken from the lows of about $13 an ounce, you time that by 400, you get $52 an ounce, and I think it's going a little bit higher than that. And you look at gold at about 3,000, 3,500 for the end of this bull market, and a less than 60 to 1 ratio, it makes all the sense in the world. Now, I don't know if it's going to be in a year or two or 3 or 4, but a dollar bear market usually lasts for 7 years. So this is a phenomenal time for investors to be in precious metals and precious metal stocks. Short term, in the next few weeks, whatever, in a bull market, every pullback is a buying opportunity. So that's at least where I'm coming with this.
So Florian, I know that you recently called for a little bit of a pullback in the gold price. Can you explain why you think that'll be the case and what will happen after we get that pullback?
Yeah, I mean, look, I think we talked about this in our last call as well. We are in a bull market. Just 3.5 months ago made its low of its bear market. So what I see is we've had a run up for now 2 years. Gold started at 1160 in August 2018, and we had a massive.
It looks like we're getting a little technical difficulty with Florian. I'll turn it back to you, Lior. What are your thoughts on will we have a pullback in gold? Basically, Florian's analysis was we've been going for about 2 years here. It looks like we may have a bit of a pullback before we hit the next leg of the bull market. Do you think that's going to happen, or do you think it's just going to shoot through 2000 and keep going?
Yeah, so I think, like I said, and I think Florian is back.
Yeah, you lost me. Sorry.
Yeah, I lost you. Sorry about that, Florian. I know the internet's going to be one of the challenges on a virtual conference. So you were saying what we had talked about before with the gold price, maybe been running for 2 years. You're expecting a little bit of a pullback, and then what happens?
Yes. So it's basically from 1160 now to 1980 in 2 years. We didn't have a real correction in between. We had one crash in March thanks to Corona. Of energy out of the market, I think. So I would just recommend a little bit of caution at these levels at the moment. And I believe we are in a crack up boom, so any dip is your buying opportunity. And you don't sell any gram of silver and gold here, of course. You stick to it. Maybe you take some profits off with the mining stocks, some of them. I usually we have this quad exit strategy. So you take 50% off and then you let the rest run. Just to lighten up a little bit, because we also know that once this sector takes a breather, these can be really nasty and quick and deep. So that's the only advice I can give at the moment. However, if silver comes back to $20, it's already a buy. So and the same for gold. 1700 would be already probably a big pullback here. It's 1750. Likely, maybe 1800 is pretty sure. I guess we will see again one more time, but that's it. And you can see it in all the markets, right? Because the governments all over the world and the central bankers, they expand their balance sheets, and that's called a cracker boom. So the fundamental data don't get along anymore with rising stock markets, and the only real bull market is in precious metals, and I believe also in Bitcoin, which probably just started. So. Yeah. That's my take, and you want to wait for pullbacks. I mean, that's the basically very simple game you have to play in the bull market. Buy the dip, then you will do very well. And if you buy the next dip in silver, you will definitely do better than in gold. And we talked already about this as well the last time. I believe down the road at some point, silver will trade at new all-time highs and will trade at 3 digits. But as far as I can see, central bankers and governments probably will be able to extend that game for a few more years. And so I wouldn't be surprised to see gold reaching $5,000, $8,000, $10,000 in a few years, maybe 3, 4, 5, 10 years from now, who knows? But I think also in the short term, like we saw, for example, in Bitcoin just yesterday, suddenly, boom, $1,500 to the downside out of nothing. And that thing can happen with gold and silver as well.
So you mentioned Florian a crack boom, this Austrian economic concept. For those that may not be familiar with Austrian economics, can you explain what that is?
The Austrian economics, well, that's basically a school of thought, or a thought school coming from Austria, mainly initiated by Ludwig von Mises and a few other great guys. And it's basically just normal, real thinking about what makes sense. You know, we are run by people for many decades already who believe printing money out of nowhere, out of nothing, out of air, it makes sense and is a concept that you can base your economy on it. And they really want to tell us that this is a fair and social thing that they're doing, but in the end, it's just a total Ponzi scheme. And the Austrian School of Economics basically has been warning already before the hyperinflation in Germany 100 years ago, and have been saying that if you expand the money supply, you will get at some point rising prices because you devaluate the currency. And that's exactly what's going on for years and decades, actually since 50 years, since the end of the gold standard, or when Nixon closed the gold window. What's missing and what is a little bit maybe tricky, that we didn't have a very high velocity of money over the last few years and decades. And that's why all this money printing didn't really create visible, strong inflation numbers. However, we also have to admit that most of these statistics are basically fake. So if you would use the same procedures like 50 years ago, you would have totally different inflation numbers than what you get today, because basically they calculate, like, if you would buy a TV every year and the TV is bigger and stronger, has more power and is better quality than last year, then basically this reduces the inflation rate somehow. That's how they calculated it. And so Austrian School of Economics is a thought school of free libertarian thinkers, basically, from all over the world nowadays, that believe that less government, less regulation, and more free market is the best way forward for all of us. And I strongly believe in that.
Leo, are you the same mind, or do you follow the Keynesian model, since that's what tends to dominate our economics across the world now?
No, I'm pretty much of the same mind. There's a concept that limited government is better, and that the gold standard is better for running an economy, and then the fiat currencies that you run it with giant deficits, etc. And because of human nature, politicians will never say no to running a deficit. And I think that's the main problem with it. So with a gold standard, it's not like we were really on a 35-1. It's important to remember that as well, right? And that's the reason Kissinger and the central bank in the United States and obviously the face, Nixon, blew the gold standard out of the water. It's because it wasn't 35-1. It didn't have an open market where it traded freely, but there was clearly more dollars than the ratio justified. That's why Charles de Gaulle wanted an audit. He said, look, you've been through the Korean War, you've been through the Vietnamese War, there's no 35-1 anymore, and I don't trust that you have the gold. And at that point, Western Europe was already recovering very fast from the Second World War, and Europe was about to say, look, we can have the gold. Why is dollar the reserve currency? We have enough gold. We can back our own currency. We don't need you. And basically, Kissinger said, we have to make gold irrelevant, otherwise we're going to lose the reserve currency role. And that's why they took it off the gold standard. That's literally in the internal exchanges between Kissinger and the central bank. He said, look, we have to make gold irrelevant here. And so, look, gold or not, gold standard or not, if you have bad politicians in the country, and if you have an uneducated population in the country, neither system will produce stellar results, because you're working with average people or with corrupt people, and therefore my thesis, which differs from Keynesian or Austrian or whatever you want to call it, My thesis is I cannot change much about whatever 330 million Americans are doing and 500 million Europeans are doing, or 2 billion Chinese and Indians are doing. I can only educate myself and whoever listens to these types of podcasts. So if gold is readily illegal and everything, and you can buy it and protect your purchasing power with it, not compete with returns from real estate or from the stock market, etc., but compete with returns that you will get if you put it into either bonds or in straight cash. If you have gold and silver at doing your bidding, I mean, since 1971, I think it's pretty clear, right? 35 to 2000, you're looking at a 6,000% increase, almost a 7% a year compounded on something that doesn't produce anything. An ounce of gold is literally just an ounce of gold. And so mismanaging a fiat monetary system as badly as the United States and other countries have done results in higher precious metals prices, specifically gold, which is a much bigger market than silver. It's 15 trillion compared to 70 billion. It's not even a competition, right? So that's my view on gold. Gold, I always own. Bear market, bull market, it doesn't matter. I own it. I just have physical gold. For me, what I did was I took 2 years worth of my lifestyle burn rate. So let's say the family unit burns through $5,000 a month, just as a theory. You multiply that by 24, so that's $120,000. You take that fiat, you move it into physical gold, you store it wherever you want, and that's your position in case there's a 2-year depression, a real problem. Then you have 2 years worth of boom time, expenses converted into gold. Obviously, it becomes even more valuable. So that's one thing. With silver, because it is so correlated to the dollar, for me, it's more of a trade. I don't want to own silver all the time and long term, because you've seen it went from $1.92 in 1971 to 25 today. That's not a whole lot of return. That's 1,340 years. You could have done much better in many other things, much less volatile, much less risky. But when it moves, I can't complain. I bought it in 2009 for 15 an ounce and sold it at 45 a couple of years later and funded my my honeymoon with it. So when it moves, and that's where I want to be with it. And right now, my take is that it's going to move, and it's going to move very fast. And I don't know how to time these pullbacks if it moves down from 26 to 24, etc. So I just buy it, and I make sure that I don't buy too much of it compared to my net worth and compared to my other assets. But for sure, it moved in a range between 14 and 20 for a few years and broke out of that. And so 20 is definitely the support of supports. And I see it going to 26, and then beyond that, it will form a new market for new buyers that will come in. You have to remember, 50% of silver is industrialized, 90% is bullion. So when these bullion crowd comes in, and they obviously will come in, and people that I hear a lot of people that can say, look, why buy silver? You can buy a fraction of gold, or a fraction of an ounce. You don't understand the gold crowd if you think people will buy a digital fraction of they want to hold it. Right. That's the crowd we're talking about. And therefore, I think it won't matter to them. If they feel inflation is coming, I don't think it will matter to them if they pay 30, 40, 50, or 60 an ounce for silver, which is where I think it's going. So, but then I'm out. So like Florian said, I want this. This is a cycle for silver, very different than the way I view gold. This is a cycle for silver. I want to be invested in this cycle with the silver stocks. We wrote a lot about this at wealthresearcher.com/rally and /ratio and /gold playbook. These are all very comprehensive download free reports, PDF reports that we put for your listeners. And these are all about gold silver ratio, why silver is going that high. And that's at least my view on it. And I back it with my own money. I mean, it's real.
So Florian, I know that gold and silver are very different. Leo did a really good job of explaining that. Can you explain for the audience why silver is different? He mentioned industrial use. It's not just a monetary metal. Can you go over some of the things that silver is used for and why it reacts differently than gold for those who may just be getting into the precious metals trade?
All right. Well, I mean, first of all, silver is a much smaller market than gold.
Mm-hmm.
And the other thing is that most of the silver that has been mined over the last few hundreds or even thousands of years has been used. So it's not like gold hoarded somewhere and depending on the price, it may come back to the market. No, this silver is gone. And we also used a lot of silver over the last few decades in electronics. And all these amounts of silver are so small that recycling doesn't make sense most of the time. So most of the silver is gone. And that's really important to know. Silver is a byproduct, mainly in copper production, lead, zinc, gold production. So it's being mined on a large scale by big companies, but then again, they don't really care about it. And also many of the consumers or the consumer producers, they don't really care too much about the price. I mean, it's similar what Leo said before, like if they pay $15 for an ounce or $35, it doesn't make too much of a difference how much they need to build for a cell phone or mobile phone, right? But one of the really interesting things down the road for silver is, I believe, the whole movement to more sustainable green energy kind of world. And solar energy, for example, is one of the big things for silver, I believe, in the future. Also, electric cars. There's a lot of things happening, and I'm not a scientist, but I know that silver has a lot of industrial use cases. And now, with being in a new bull market and silver generally always being super sensitive to inflation, and seeing how it started now since 3.5 months, basically, you can imagine that the demand for silver, especially from the investment demand side, will explode and is already exploding and has been responsible for that impressive move over the last few months. And you can see that this small, tiny silver market, I mean, the ETF demand is driving prices higher quite a lot at the moment, and then couple this with the industrial demand that certainly will come back at some point in the future, and couple that with the fact that there is not a lot of silver storage or available. You cannot simply expand the production. So it's a very tight and very interesting market. And once it moves like crazy. And it could be, I mean, Lear described it, and I think the one example would be the late 70s when silver started also around, I think, $2 and went basically to $50 within 2 years without stopping too much or looking back. We could be in such a run as well, yes. And also interesting fact about silver is that silver is one of the few commodities that is still trading below its 1980 high. So while gold is way up, it used to be at $1,890 in 1980 when silver reached $50. Gold is making now new all-time highs above close to $2,000.
Because I think what Florian was describing was silver as a value investment right now is related to gold since back in 1980s when gold's been going up. Are you there, Florian?
Me again?
There we go.
I'm sorry.
It's okay.
What is the last one that you got from me?
So I think you had mentioned that gold has gone up since 1980, where silver hasn't necessarily. Excuse me. So I was going to say, it seems as though silver could be considered a value investment for people who may not be able to afford a lot of gold, and there may be more movement in the silver price. But on the other hand, we have to be aware of the volatility. Just be careful how fast that trade can move against you if you get into it.
Right. So, I mean, if we believe that we are in some form of a cracker boom scenario, and this is basically saying inflation, and we know that silver is super sensitive to inflation, and we can expect silver to be the much better investment than gold over the next few years. It's also much more volatile, and it can move for you, but also against you. So you have to be careful. That's the main thing. And I personally recommend to stay away from anything leveraged with silver.
That's a good point. So is it better to hold physical silver, or is it better to go into SLV? I'll ask that question to both of you. Florian, you can answer first.
It depends on the amount of money that you want to invest. So I definitely would recommend to have a few silver coins at home, no problem. But everything above, let's say 20K, I wouldn't feel good to store at home. So you would look for a trustworthy custodian. There are a few. I would prefer that than the SLV. SLV is a trading tool. So I would like the Sprott Physical Silver Trust, for example, or if you use Gold Money or Bar 9 or a few other of those custodians, I think these are trustworthy ways, and you can also get out rather quickly of your silver, because the problem is really if you put in a lot of money into silver and then you carry kilos and kilo bars to your dealer once you want to sell them, it's not a very comfortable way to get out of it. So you need to have I think a strategy where you have some at home in your own hands to access it, because we really don't know what's coming there. Maybe at some point you need your silver coins to buy a chicken, and you want to have clickable silver that you can then rather easily sell. But you want to make sure that it is the physical stuff laying behind it, because otherwise, where's the point to buy it at all then?
Lear, what's your opinion on that? Do you hold the derivatives, or do you go for the physical, or do you use both?
Well, I actually use both, and my value add perhaps is that I'm very much a fan of making sure that I have a really good relationship with the bullion dealer. If there's ever a problem, it could be a supply chain problem like happened right now. It could be other problems. You just don't know, right? Obviously, confiscation is not something that people think is an imminent threat. But if something happens, make sure you have a good relationship with that bullion dealer, that you trust it. That if something happens, then and you're storing it with a depository or with the Brinks or whatever, you have it. And you can also diversify among a few countries. That's another geographical diversification that you can add. I love the Fizz and the PSLV from Sprott, actually. And what I really like about precious metals, in the traditional world of stocks, everyone looks for small caps and for growth companies that are poised for amazing growth. That's where the more compared to blue chips, that's where you'll get better returns if you find the right ones. What I like about the precious metals sector is you don't have to do that. You can go with the big ones. You can go with the reputable names, the blue chips, so to speak, and they actually over-deliver against the small caps for a lot of the bull market. And that's a phenomenon that is unique to a bull market in precious metals. You can actually go for the sure things, and they will provide a very good correlation to the underlying spot price. So that's one thing I really like. You don't have to go for the exploration play where it's hit or miss in order to bank your profits. You can go for the big miners because they'll have stellar earnings and they'll get institutions involved, which the explorers won't, and perhaps a few of the developers will. But pension funds, central banks, they buy the big ones. They don't mess with the small ones. So that's important to keep in mind. And I love that part because you can own the royalty companies, you can own the big players, like we've put together in wealthresearchyou.com/4W, like the number 4 and W. Those were our 4 must-owns in 2019. In June, they're all up more than 100%, and they're the lowest risk companies. So that's the two things I love. With regards to where to put the silver, I'm not in the camp that believes that we're going back to caves, right? So maybe a disruption, there may be a problem with monetary policy. The next time something like March of 2020 happens, in my opinion, what will happen is we won't go to anarchy and barbarism and Vikings, etc. But we will hit a point where other PMs or prime ministers from India and from Brazil, from Russia, will say, hold on, before you Americans, pump this system with trillions of dollars at our expense, let's talk terms. And that's what I think will happen with the dollar. It will stop being the monopolistic reserve currency. There will either be two, one for the BRIC countries like the Chinese and all the countries that like China and are, in diplomatic relationships with China, and there will be another block for the countries that put more trust in America and in Europe. Europe can go either way. But look, 60% of the world's trade is still dollars, 20% is the euro, and the yuan is like 2%. It's not even capable of being a reserve currency. But what it's capable of doing is putting some challenge on the dollar and saying, look, that we've had enough. We either talk restructuring, we either talk, how you guys start paying back this debt, or we're not going to oblige with what's happening. It's sort of a bad marriage where the divorce looks even worse. So they're just staying married, but stuff can happen. So that's at least my view on it. I know there's people thinking that it's going to get much worse. And if they do, keep some physical on you in the house, etc., whatever you think is appropriate. I'm not saying anything against it. I'm just saying it's not something that is, if you don't have it right now in your house, then you're unprepared for tomorrow, right?
Okay. All right, last question of this session of the conference, guys. I'll start with Lior and I'll end with Florian. Gun to the head, what does better in 2020, silver or gold?
Yeah, I don't like gun to the head anyways, but I've had my IDF years. But look, in my opinion, it's impossible to determine which. So you're asking me just to give a flat out guess. And if I have to guess, I'd guess gold, because it's literally just passing its all-time high. I think it can move up another 8% here. Silver's done 100% since March. I just don't see it doing an additional 10% here. That's just take it for what it is. It's literally an opinion. There's nothing to back that up. A calendar year, just to get, I'll end with this, just to give you an idea. A calendar year is like putting one hand in ice, in an ice bucket, and the other hand in lava water. And on the average, you have probably some soothing waters, but you're burning in each hand. In the last 100 years, the S&P 500 has returned 8.6% a year. In the last 100 years. But there's only been 4 calendar years which actually set on that average. Now, 6 years, it's either been way up there or way down there. So a calendar year means absolutely nothing.
Right. Very good point. Okay, Florian, I know you do a lot of technical analysis on gold and silver. What's your technical analysis saying for 2020? Do you favor gold, silver? What's your pick?
Well, I think that we will very likely get some form of a pullback or at least a consolidation before the US election. And gold could easily pull back 10%, maybe even 15% from here. And if gold does that, then silver will do 20 to 25, maybe even 30%.
Pull back 25, 30%, you think, or keep going 25, 30%?
No, go back. Silver can easily retrace 20, 25%. I mean, we are up 100%. So let it pull back $5 from here and we are at 19 and it's a great buy again. So if you want me to tell you until the end of the year, which is another 5 months, I would say gold will probably be the better investment. If we look down the road the next 2-3 years, silver will definitely outperform everything else. And I really suggest be patient, wait for the pullback. Some form of a pullback will come, and then it's time to load up. And I personally will focus on silver and also silver mining stocks. Very clear.
Yeah, good point. I think the mining stocks could outperform both of them, but we have to see what happens with the economies as well. I have to throw that factor in there. Okay, guys, this has been the Gold Silver panel for North American Monetary Metal Summit. I have to thank my very special guests, Lior and Florian. Thank you very much for joining us.
Thank you, sir, for having me.
Thanks, if you're an attendee at the conference, they have exhibitor booths. You can go there. There'll be a link to their website as well as some information about each guest. So please feel free to stop by. Also, ping them and ask them questions. Make them work for the conference. Thanks, guys. Appreciate you.
Thank you.
Thank you, sir.